Welcome back to Investing Talk Podcast. Today we're focusing on the Sprott Physical Silver Trust, PSLV. You brought some really interesting information our way about this trust, and our goal today is to really understand what makes it tick and, well, what's most important for our listeners to know.
We've got a collection of recent reports and, updates that should give us a pretty solid picture of PSLV's financial standing, where it kind of fits in the market, and maybe what the future holds.
Right. We're going to be looking at PSLV's recent climb past a significant net asset value mark, their financial reports, how much silver they've actually been buying.
And the stock price volatility, too, that's been noticeable.
Good point. Plus how they stack up against other options in the precious metals space.
We'll also touch on, potential risks and opportunities down the line.
Okay, let's get into it.
So PSLV, fundamentally, it operates as a closed-end trust. Its primary holding is physical London good delivery silver bars.
The big standard bars, basically.
The standard, high-quality silver bars traded on major global markets. It means the asset is recognized and, well, relatively easy to value. The trust itself is listed on the NYSE ARCA and also the Toronto Stock Exchange.
And the core idea really is to give investors a way to own physical silver securely and with decent liquidity, but without all the headaches of finding storage and insurance yourself.
That's the main pitch. Now, looking at the numbers, as of April 2025, the net asset value per unit was sitting at $10.27.
Okay.
While the market price was $10.18. So a slight discount there.
Which happens with closed-end funds sometimes, right?
Yeah.
Unlike an ETF.
Right. PSLV has a fixed number of units, more or less, so demand can push the price slightly away from the NAV, either a discount or a premium.
Interesting. And over the past year, that NAV actually jumped quite a bit, around 35%.
It did. A strong run. But like you hinted, it hasn't been totally smooth sailing recently. We saw that pretty sharp daily drop over 7% back on April 4th this year.
And year-to-date, the NAV increase is more like, what, 2.17%? So much more subdued recently.
That recent volatility is definitely something to keep in mind. But when we talk about financial health, it's crucial to grasp that PSLV isn't generating revenue like a normal company.
No selling products or services.
Correct. Its financial well-being is basically its NAV, the value of the silver it holds, which, as you mentioned, recently crossed that $6 billion threshold. So the silver is the core financial element here.
Makes sense. Now, they do have expenses. The management expense ratio is 0.58%. And it's worth noting, they don't really carry significant debt, which fits with that whole just holding the metal strategy.
It does. But some of the other financials might look a bit strange if you're only used to analyzing, say, manufacturing companies. The latest revenue figures showed a big decline, almost 50% over 3 years, based on the data we have.
That sounds quite dramatic.
It does, but again, revenue here isn't quite the same. It's more tied to changes in asset values and maybe flows in and out.
And they even reported a net loss, $239.31 million recently. That results in negative earnings per share.
It does, and that loss was apparently affected by operating losses and negative cash flows. It highlights that key difference. PSLV's earnings are much more a reflection of silver's market price swings than operational success or failure in the usual sense.
So a net loss isn't necessarily a sign of bad management, but maybe just a tough period for silver prices.
It could very well be. It makes metrics like the price-to-earnings ratio, not really applicable when earnings are negative.
Okay.
And their debt to equity, as we said, is 0. They did have negative operating cash flows, and return on equity is also negative because of that net loss.
Right. It all connects back to that net loss figure. But then there's the price-to-book ratio, which was 1.38. What does that tell us?
That suggests investors are, or were at that point, willing to pay a bit of a premium, 38% more than the stated book value of the assets.
So despite the negative earnings, there's still confidence reflected in that PB ratio, paying more than it's worth on paper.
It suggests a positive view of the underlying asset, the silver, and perhaps the structure of the trust itself. It's also key to remember they generally don't pay dividends. The focus is purely on holding silver and reflecting its value.
Okay, so that covers the sort of financial mechanics. Let's zoom out a bit. What about the market environment? What's PSLV's main edge, do you think?
Well, based on the info, it seems to be their established brand, Sprott, is a known name in precious metals, and probably their cost-effective management of actually holding and securing all that physical silver.
And where do they sit in the market?
They're definitely a significant player, especially in the niche of physical silver trusts. They offer that secure, listed way to invest directly in the metal.
What about the tailwinds? What trends are helping them?
Two main things, really. One is growing industrial demand for silver,
Yep.
electronics, solar panels, that sort of thing.
Right, the green energy push needs silver.
It does. And the other is the classic safe haven appeal. When economic times feel uncertain, investors often look to assets like gold and silver.
Always a factor. And the risks on the industry side.
Well, the big one is just the inherent volatility of silver prices. They can swing quite a bit.
Up and down, yeah.
And then there's always the potential for regulatory changes that could impact how precious metals are traded or held.
Okay. And we mentioned that $6 billion NAV milestone in late March 2025. That involved holding over 182 million ounces of silver. That makes them the second largest exchange-listed physical silver fund globally, right?
That's correct. It's a huge amount of silver. And their buying has been pretty consistent. Since 2020, they've added over 120 million ounces.
Wow.
Even just in early 2025, they picked up another 1.5 million ounces. And interestingly, the sources noted no physical redemption requests in 2025.
Meaning unit holders weren't asking to trade their shares for actual silver bars.
Seems so. Which could suggest holders are confident in holding for the long term, or perhaps find selling units easier than redeeming physical metal.
That lack of redemption is interesting. Okay, let's dig into the specific strengths and maybe some red flags.
A key strength is definitely that the silver is fully allocated and unencumbered.
Meaning it's specifically set aside for the trust holders and not being lent out or anything.
Precisely. It's meant to be theirs, directly backing their units. Plus, that physical redemption option, even with conditions, is a big differentiator. And the storage with the Royal Canadian Mint adds that security layer.
Feels safe. And the red flags. Besides the volatility we keep mentioning.
Volatility is the main one, affecting both NAV and the market price. And related to that, the fact that the market price can trade at a discount to the NAV. You might not always be able to sell your units for the exact underlying silver value at any given moment.
Got it. What's the general mood out there regarding PSLV or silver right now?
Generally, sentiment around precious metals as safe havens seems positive, especially with ongoing economic uncertainties. You definitely see chatter online about potential silver price increases.
And compared to the competition, you mentioned iShares Silver Trust, SLV.
Right. SLV is bigger, asset-wise, but crucially, it doesn't offer physical redemption.
Ah, okay. Big difference.
Then there's Aberdeen's Standard Physical Silver Shares ETF, SIVR. Also holds physical silver, but again, typically not redeemable for the metal by retail investors.
So similar to SLV in that regard.
Mm-hmm. And then you have something like the Invesco DB Silver Fund, DBS, which is different. It tracks silver futures contracts, not the physical metal itself.
So futures versus actual bars.
Correct. So that redemption feature really does set PSLV apart from SLV and SIVR, the main physical competitors. And its NAV growth and sheer size are definitely points in its favor.
Okay, that makes the competitive landscape clearer. What about broader risks and opportunities looming?
Well, beyond the silver price itself, you have potential regulatory shifts we talked about. Macroeconomic factors are huge. Think about what the U.S. dollar is doing, where interest rates are headed.
All that impacts commodities, yeah.
Absolutely. And potentially any major disruptions in the physical silver supply chain could eventually be a factor.
And on the flip side, the opportunities.
It really comes back to that safe haven role. If economic turbulence continues or increases, investors often flock to assets like silver, potentially pushing up demand and the price, which benefits PSLV.
So tying it together, what's been pushing the stock price recently?
It seems largely driven by that safe haven status, despite some of the financials like the net loss we discussed or recent price dips, the strong NAV, the physical backing, the market position. These seem to maintain its appeal for investors seeking that specific silver exposure.
Okay, so pulling all this together from the sources, what really seems key is PSLV's unique spot. A trust holding actual physical silver with that significant hoard, plus the ability for unit holders, under certain rules, to actually get their hands on the metal. That's a major contrast to the bigger ETFs like SLV.
And you can see clearly how its performance is just incredibly tied to the silver price itself. That brings volatility, sure, but also direct participation if silver goes up.
That recent $6 billion NAV milestone and the steady silver buying definitely suggests strong underlying interest. But as you said, the net loss and revenue decline really underscore that this isn't a typical company. Its value is all about the asset it holds.
It's a very direct play on silver, not on operational efficiency in the usual sense.
So ultimately, whether PSLV makes sense for an investor really depends on their view of silver's future and if they value that direct physical link, including the redemption possibility. Which leads to a good question for listeners to ponder. How does this information about PSLV's structure, its recent performance, fit into your broader investment strategy and your outlook on precious metals?
A crucial question. Well, thanks for walking through this with me.
Great discussion. And if you, our listeners, found this informative, please do subscribe, like the stream, and drop us a comment with your thoughts.